Well, good afternoon, then, folks. We're at the end of another week of trading on Friday, the 1st of March. We're into a new month. We had a leap year, obviously, this year, 29th of February yesterday. So maybe a slightly longer week of trading than we would normally have on this week of February, and one extra day of trading over the course of this year. But not exactly fireworks across the board in markets over the course of this week. I mean, you can see on the economic calendar, I mean, inflation figures from Japan. Um, Inflation figures from Japan slightly lower than previous. No consensus for them on this calendar, but main focus of attention really was in yesterday's session. PCE, not I wasn't really able to figure out why PCE was on once it was on Thursday. Maybe I'm just a bit stupid, but it is usually on a Friday. That in line with expectation. Personal income in above consensus. Personal spending in line with consensus, and that has kind of helped stock indexes kind of grind their way higher over the last kind of 24 hours. You can see S&P 500 was lower for most of the week, but just chopping sideways. Positivity to end the week. Yeah, I'm saying positivity, a slight bit of positivity, and put this on an hourly chart. You can see it is higher post PCE yesterday, but same thing for the S&P. The Nasdaq grinding higher. Dow Jones is higher than it was pre-PCE, and then the Russell as well. But ultimately, a lack of direction across equity markets over the course of this week. Slight bit of upside on the US dollars across a few different pairs, kind of Tuesday night, Wednesday morning, but ultimately that's been relatively choppy this week. You can see euro dollar cable all over the place. Dollar CAD slightly higher to start the week, kind of into Tuesday, Wednesday. Dollar yen a bit all over the place. Some comments from Japanese officials saying that inflation was returning back to 2% target, and markets kind of ran with that and said that they're likely to cut interest or hike interest rates, should I say, off the back of that. I wasn't really too sure whether it kind of generated much Japanese yen strength off the back of that, but you've rebounded that, and you're back at kind of where we were pre those comments on Thursday morning or yesterday morning. Now, the main focus of attention, PCE. You can see the Kiwi down with the RBNZ. I mean, I don't know why it's medium impact on this calendar, but we did have the RBNZ out Wednesday morning, slightly dovish, saying that inflation, they have made substantial progress on inflation, albeit still slightly higher than their target, but again, substantial progress made towards getting inflation back towards target. Outlook for GDP going forward, still not great, with global central banks globally likely to have to keep interest rates higher for longer than most had anticipated in order to cool down inflation. You've got China continuing to struggle, with the Chinese economy continuing to struggle. It's a negative for Australia and New Zealand. So they're not expecting great growth out in New Zealand. They're still expecting monetary policy to remain restrictive into mid-2025, but they did bring down their end goal for their interest rate slightly, or their terminal rate for their interest rate, which is the OCR, which is the official cash rate in that country, but ultimately it's the same thing. So kind of downgrading that negative outlook on growth. Kiwi dollar sold off the back of that, but hasn't exactly had a massive amount of follow through in the 48 hours since. You can see bond markets, all over the place, yields just sideways, 10-year, 2-year. Really, unless you're a trader of Bitcoin this week, it's been a pretty difficult week to go and make some profits for yourself. Oil continuing its move higher. I mean, ongoing tensions in the Middle East, lack of a ceasefire between Israel and Hamas. You got the Houthi targeting the Red Sea region. But you've also had rumours this week of OPEC extending supply cuts at their meeting in mid-March. We'll get around to that when it comes to it, but speculation this week that they do go and increase supply cuts. That has sent the price of oil higher. But Bitcoin, the main mover of this week, I mean, Bitcoin is approaching all-time highs. 69,000, pretty bang on. 69,000 is the all-time high reached back in November of not last year, November 2021, 2024. Yeah, definitely not last year, not even the year before. So 2021 November, all-time highs. And that just continues its positivity off the back of ETFs being accepted from a lot of the major investment funds. So I mean, does it regulate? It doesn't regulate the cryptocurrency directly, but it sort of regulates investment in it, as it is backed by companies like BlackRock and places like that. So kind of a regulated way of investing in it, although it does not regulate the actual coin itself. So positive, but that increases inflows into the price of cryptocurrency. There is then going to be a halving in March or April, should I say, and that is again a positive for the price of Bitcoin. More investment, less of it. Increased demand, less supply causes Bitcoin to go through the roof, which it is at the moment, and that is certainly for now showing no signs of slowing down. If you're into symmetrical triangles and stuff, you can see one there. I'll draw it out for you. Maybe that is a sign of some continuation to the top side on the price of Bitcoin when you get around to it. So we'll see how that plays out in the coming days and weeks ahead. But ultimately, I think you've got to stay on the long side of Bitcoin for now. But apart from that, a lack of fresh information, a lack of movement across the board, really. I mean, the DAX continuing its move higher. I've spoken about the DAX many times in these videos. But inflation, another positive sign now. Inflation, continuing to come down in Germany, albeit not quite in some of the other countries. But again, interest rates lower in Germany, they are likely, or lower in Europe than the majority of the rest of the G8. Certainly, also they are likely to cut before the majority of the G8. So again, that's why German stocks seem to be a target for investors over the course of the last number of months. You do still have one data print left this afternoon, manufacturing PMI out of the US. We'll see how that plays out, but ultimately a relatively quiet week, certainly on the US front. Doesn't surprise me with the lack of kind of proper economic data to come out. You see durable goods orders on Tuesday massively lower, but didn't really have much of an effect on markets. GDP figures slightly lower than anticipated, again hasn't had much of an effect on markets. So maybe this is a case for maybe the turn in some of these data prints. Weak durable goods, weak GDP, inflation not rising. What's this manufacturing say? It'd be interesting to see if this manufacturing PMI comes out lower than consensus, what the reaction to it would be after a raft of kind of not fantastic economic data prints over the course of this week. But we do have the Bank of Canada next week, so we'll cross that bridge when it comes to the Bank of Canada, ECB, NFP then towards the back end of the week. So a fair bit for us to go through over the course of next week, but we'll cross that bridge when it comes to it. We'll update more on Monday when we get back to it. Lack of video, apologies for the lack of videos this week. Been slightly preoccupied and haven't managed to get much out, but we'll be back to normal next week. Have a week ahead video on Monday, and we'll see what we're looking like come next week. But anyways, best of luck for the month of March. 31 days, I believe, in March, certainly not 29 that we had in February. And yeah, last month of Q1. So let's see if we can make some profits over the next number of weeks.